Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, everybody. Welcome to this Friday edition of Benzinga's Pre-Market Prep. I'm Spencer Israel, as always, joined by Joel Elconin and Dennis Dick on the show today. I feel like we'll probably end up talking about Bitcoin at some point because it happens pretty much every day, but we've got some stocks in the news. AOBC is your disaster stock of the day. They had earnings, so did UNFI. FNSR in moving as well. A couple big ratings changes to discuss, Trivago and some other big ones that caught my eye. Our guest today is Chris Temple. He's editor of The National Investor. He would join us at 8:35. Joel, how's it going this morning in the markets?
S&Ps are trading up 4.5 points here ahead of the unenjoyment number. I'm still talking December, folks. I'll be doing March numbers on Monday. Your pre-market low, 37.75, a little less than 2 point below the close of 39.50. On the upside, your pre-market high is 46.75. My big number is 48.75, though, and that was your high on Tuesday. So let's just keep an eye on that. I think there's a lot of air above that 48.75. We have crude trading up 96 cents at 57.65. We had crude put in a double bottom here. Let's go to the daily chart. Double bottom on Tuesday and Wednesday. Now moving up towards $58. We have gold in the red by 440, now under 1250 at 1248. 1248.70. Silver in the green, though, by nearly 4 cents at 15.84. And after one of the wildest days in the history of Bitcoin, we have it trading at 447.12. And let me give the percentage on that. The percentage, so hard to get your quotes on this. It's trading up 1.45%. Dennis, how you doing on this Friday? Unenjoyment Friday morning.
I'm doing pretty good, just chilling here early morning, and I want to talk to you about your Bitcoin trade because Joel's getting active here. He tried to get active yesterday, and he got active here this morning, and he actually took off some of the profits. So congratulations to Joel, who I still say made the easiest money in Bitcoin because he made it all the way from 8,000 until he sold some this morning here. What did you do? First of all, tell us about your story yesterday. And then tell us about, your Bitcoin trade here this morning.
November 16th is when
you bought it November 16th.
Yeah. And it was
in about 3.5 weeks.
Yeah, it was at 7,000.
7,000 you bought it at.
Right.
Nice.
Right. And, yesterday.
So you doubled your money.
Yes. And me and you were texting and going back and forth yesterday. And, it was just going nuts. It was like 16.5, 7, 17.5, 18, 18.5. And my spidey sense just said, man, this ain't right.
Sell.
This just ain't right. So I decided to sell half. I couldn't get on Coinbase, and I'm not hooked up on the GDAX ledger, and it just verify, do this, do that. And I'm like, oh, man, I was locked out just like a lot of other people. So I let the dust settle. I looked at it last night. It was like 16.5, 16.8. And I'm like, well, I'll give it to the morning. And I came in this morning. It's down again. The futures start trading on Monday. No matter what happens now, if Bitcoin goes to zero, I'm a winner. Substantial.
So you sold half this morning?
Yeah, I sold half this morning.
And you know what? And that's what I texted you yesterday. Sometimes that's, if you don't know what to do with your position, you're up really quickly in it. A lot of times, when I get a stock that doubles, even in my invest portfolio, and I'm like, man, it's a lot of money pretty fast, I sell half. And why is that? Because you're playing with the house's money forever because you've taken your original investment out of it, and now it's completely with the house's money. You can never lose on that. You'll never lose on that Bitcoin as long as you don't buy more of them. So I think it's a good call to come in and buy half. I mean, it was a parabolic move. It went crazy yesterday. It felt like upside capitulation yesterday when it was going up $1,000 every 2 minutes. And also interesting that, you weren't the only one complaining about, what is it, Coinbase, the main site?
Yeah.
Is that what it is?
Yep.
It was down. I mean, I had my stream and there's multiple people coming and complaining that they were trying to get on Coinbase to either buy or sell. And the site was just not working. So it's funny, on the biggest day, obviously Coinbase, which is the biggest place to go or the biggest, I guess you call it, broker that's, operating here, was down in that 1 hour when the Bitcoin went parabolic. So not sure. Maybe sometimes, things go down and things can take off because liquidity is less. Sometimes it's just maybe everybody just saw the price going straight up and saying, like I want to ring the register, try to get on there. And it says, what did it give you a message? Come back in 24 hours or something?
Well, it said 24 hours. It was just, I couldn't verify. I just want to give a shout out to Jeff Goldman, my buddy who actually told me to get in at like $300. And
he's all over it.
And I didn't.
Is Jeff still in?
Jeff is still in.
Did he sell any up here in this crazy move?
I think a while ago he covered his nut on what he invested. So I think he's been playing with the house's money. I think he has an order in at 49,999.9999. So that's his target. But
what was his order in? What's his target?
I'm joking. I'm joking because remember he said it could go to 50,000. So he didn't want to miss the 50,000 print, but it's in. Actually, I'm communicating with him right now. Coinbase cannot handle the demand, through the site. We're going to have an exchange stepping up to the plate. We're going to have the SIBO coming in.
That's the good thing.
Yeah,
you're not going to have these situations where you're coming in trying to sell and the site's down and tells you to come back in 24 hours. And this is Monday. It starts trading Monday.
The SIBO starts on Monday. And the other thing too is, one of my friend's dads always told me, about money and going to the bank. He said, don't borrow money when you need it, borrow it when you can. And I think that this is a situation was, maybe I wanted 17 or maybe I wanted, maybe I want to put a stop at 14 or whatever. But when the when it hits the fan, if I can't sign on and do anything, then, I'm just flapping in the wind, right? Now if I want to try and, when this thing finally settles down and I could do some levels on it, maybe I'll try and scalp around the rest of this position and see what happens. But as of right now, you talk about retracements. Also, Dennis, when I tried to sell, I saw 18,750, right? I think that one exchange printed 1950. I think there were some other exchanges that maybe didn't even get over 17.5 or 18,000, There's
got to be some arbitrage opportunities there where, it's very inefficient. And the nice thing is once this gets on, public exchanges, you got futures, you can bet, obviously, they're betting. It's almost like side bets when you're talking futures. So I don't know, deriving the price is still interesting. But in any regard here, once the real exchanges are trading this, it's going to be a little bit more regulated. It'll calm down. The books will thicken up. You're going to get that volatility down a little bit. So maybe I'll even nibble in there and, try trading it on there. I know Interactive Brokers is going to have it on Monday because they had Petterfee. CNBC was interviewing them. And that was an interesting interview in itself if anybody saw it last night. If not, I think it was on I don't know if it's Fast Money. I think it was on when he was on Fast Money.
It was on Fast
Money. They called in, they interviewed Petterfee from Interactive Brokers, who's obviously the big head man at Interactive Brokers. And they were asking him a couple of questions. One was, are they going to allow, your traders to trade? And he said yes, and it was going to be $5 a contract, which is a lot more than some of the other products. And he's like, well, there's just more risk involved here. And then they asked him price targets. And he said, well, this could go to, he says he doesn't know where it's going in the short term. He said it could even go to 100,000, but he said in the long term, he thought it was going to 0. And that's interesting. So then they come back with a question. So he's like, you're going to let your customers trade a product that you feel is going to 0? And he said, yes, that is correct. Just funny how he said that. But anyways, his long term, he said they gave him how long? And he said within 5 years, Petterfee says it's 0.
Well, I mean, what if he has some smart customers, and they're shorting it, right? So that would be.
Exactly. I mean, he's just allowing his customers to trade what they want to trade, and it's going to be a widely traded product. I mean, everybody's talking about it. It's going to get some volume, so it'll be interesting. I'm glad the exchange is stepping up here, and we're going to actually get to be able to trade these futures on some real public exchanges that have some regulation.
Just one final thing, and I did an article that's going to be out later on Benzinga talking about the event stuff. But sometimes when I do the articles, I kind of like talk myself in and out of stuff. But the buy only structure of this is something that you cannot ignore, right? This is really it's hard to short. There are ways to short it, but so far you've had a one-way street where people in the public can just buy. So what's going to happen when there's true?
You know what? It's interesting, actually. Joe C. bring up a point here, and I forgot about this part of the interview. And thank you, Joe C. in the chat for bringing this up. He did say they're not going to allow you to short it. So it is still just a one-way street at Interactive Brokers. They're going to let you buy it and sell it, but you can't short it. And they said, why? He's like, and that's when he brought the 100,000, because this thing could go to 100,000 overnight, and everybody could blow out, and it could be obviously left.
You know why? You know why they're going to do it?
They don't want the risk.
No, you know what? They're going to short every buy order that comes in there. It won't even go to the exchange. They're just
they can't. Well, the customers can't short it, so better for you.
They could take the side. They could take the other side.
I don't know if they're market making. Spencer, that's a point too. Is like, has anybody stepped up to say if they're going to be market makers in this? Like, who's going to be the market makers?
Not that I know.
You were talking briefly about it. Is there anybody that stepped up and said, yes, we will step in here and be market makers?
I don't know if anyone has actually come in and said that. People have come in and said they were not going to be. Goldman's not going to be.
Goldman's out.
Citi, Bank of America, they're both out too. So,
like, Interactive Brokers has a market making division too. I'm not sure.
They actually got rid of the options market making division.
They did get rid of the options ones. Yes, that was a good point. Last year they got rid of their options market making business. So I don't know if you're going to have like the market makers. If there's no market makers, may not thicken up as much as we think. A lot of interesting. Next week's going to be interesting when these things eventually launch and we see. But I just think as you get more exchanges involved, you get more. I think the books thicken up, and I think volatility comes down. I also think, like, it was kind of like the jack up the price yesterday as much as you can prior to futures coming out next week. Like, just like when, you have a stock that's going to go public, the underwriters always jack the price at the last minute, and get it as high as they can for when it comes public the next week. I kind of feel like that was the jack of the price on Bitcoin yesterday. Jack it up as much as you possibly can. Why you can push the price, because there's less players in there, less institutions in there than there will be probably even next week. So let's get this price as high as we possibly can before the futures come out next week. So I feel like somebody, maybe a little bit of collusion going on there, was jacking the hell out of the price yesterday.
And Dennis, Cantor Fitz is working with NASDAQ here. So there's a firm, a big time firm that's been into it before. I'm going to dig and do a little research. I mean, maybe they have some customers with some huge inventory here that want to, be able to hedge. So that, Cantor Fitzgerald is stepping up to the plate and actually been out there associated with NASDAQ. But we got the unemployment number here coming up in 17 minutes, and we got to cover a stock or two before that.
Let's go to the stocks. We always seem to have this 10-minute rant on Bitcoin when we start the show, but let's move on. Big earnings reports from a couple of smaller companies there, but this is a big one. American Outdoor Brands, formerly known as Smith & Wesson, so your gun maker there, AOBC, halted the stock just after the close, came out with the earnings. The numbers were pretty good. They're looking like a beat, but then the guidance came in, and Spencer Israel is here with the details.
AOBC Q2 EPS 11 cents versus 7 cents. That was adjusted. Sales of 148 versus 142 million dollars. So a fine Q2. Q3 guidance coming in pretty bad. The estimate was 41 cents for Q3 EPS. What it's actually going to be is between 7 and 10 cents. And again, 41 cents was the estimate. Sales of 170 to 180 million dollars is what they see for the quarter. 209 million dollars was the estimate. So huge misses for the Q3 EPS and sales guidance. The fiscal year guidance coming in very light as well.
Yeah, the full year, I believe they saw fiscal year 18. So if they saw they're seeing 57 to 67 cents, and estimates were $1.10. So they basically cut their guidance in half.
Yep.
I don't care what your stock is doing. I don't care what the chart looks like. When you cut your guidance in half, you are going down. And that is what we're seeing this morning. AOBC trading down near the lows. Now, it's come off the lows a little bit. Joel will tell you about that after hours and pre-market action. But $12.50 still pretty ugly.
You did have a very lightly traded brackets here coming off around 5:45, 6 o'clock. So kind of discounting that 1180 low that you made at 6:15, around 6:15 this morning. But, basis this chart here, first I'll give you the low of the move, call it the former low of the move. That was 1287. We are below that level. So if you get above 1287 here, then you figure people are coming in to use this opportunity to cover shorts. Below 1287, you get to levels that you haven't seen since April of 2015. And look at 3 months in a row, you bottomed between 1216 and 1263. So I'm just going to, I'm going to call it 1240. Support here now for AOBC.
Support in the 12 handle. Takes out 12 and then Katie barred the door.
Yeah, well, then you dropped to 931, which you January 215.
So hold 12. Key to hold 12. This market's been holding the lows a lot of times when they come down here and test. So as long as this thing holds $12, maybe do some bottom fishing. Through 12, I don't want any part of it.
Wasn't this a Trump stock? Or where's it supposed to do?
Well, I already thought it was a Trump stock, and they all thought wrong because there's guns, pro-guns, but it was an anti-Trump stock because once Trump came in, they're like, well, there's no reason to go buy our guns because nobody's going to put gun control in. So they were actually anti-Trump. They were Trump stocks they were anti-Trump stocks cascading as Trump stocks. So RGR is the other one, Sturm Ruger. It's trading down the pre-market as well. Sympathy move here. Trading down $1.40 in the pre-market at 54.5. This stock chart looks a hell of a lot better than the AOBC one, although it doesn't look great either.
Wow, they pounded it, though, off this number. Whew, straight down to 52. Is that correct?
RGR?
That's what I'm saying.
Had to be just a couple of trades. Yeah, I see it there. So somebody had 200, 300 shares trade down there. So 100 and then 200. So yeah, and then the last trade was 53. So that was just after the number at 411. So when it was halted, they
I see on that print that I don't know. That must have been a cross somewhere in between.
Yeah, it's only 300 shares. I had looked at the tape.
What about the 60,000 share print? I see 100.
That was at the close. That was a closing print. 60,000 shares was the closing print at 55.90.
Oh.
I have all the trades right in front of me. So it closed. That was a closing print that closed a little bit after hours. So sometimes what happens is, here's a little lesson for you. Your NYSE is manually closed still. You've got the designated market maker on the floor with the help of his computer system is putting together the closing print. Sometimes it takes a minute or two. So it actually closed for the day at 4:02:05. So 2 minutes and 5 seconds after the close was the actual closing print on the NYSE. So that really is an after hours volume. That's regular session volume. Even though it appears to be in the after hours, it's not, because that was the New York closing print. So that was regular session volume just occurring after the close.
All right, then only down $1.40 at 54.5. I would just keep an eye on two levels here. 53.70 is your 3-day low, and then going back to November 28th, you had a low at 51.80.
RGR, just Spinner making a good point here in the chat that RGR actually missed pretty badly there about a month ago, and it bounced. So if that's any indicative here, just be careful if you're shorting this thing in the hole this morning, or maybe you want to try from the long side the AOBC, because sometimes what happens in one will happen in the other one, and people forget what happened a month ago. So thanks for reminding us that a Spinner. I think I tend to agree with you here. I think I'm more of a buy the dip here than selling in the hole, but I might be hands off on this just because if I could get back up over 13, I think I get interested. I think I want it back up. The AOBC we're talking about, that is. I think if it gets back up over that 13, it's been trading pretty heavy volume here down the 12.5 area. It's back up over 13. I think I get interested from the long side on a potential bounce. But those numbers were really bad.
All right, real quick before we go to our next stock, Fuzzy here is asking about EIX, Edison International, and that is...
They raised the dividend again, I believe.
Did they? Was that the news on it?
So, I think they did. What happened with this a couple days ago? Is that earnings? Spencer, what happened 3 days ago? This thing got murdered.
Yeah, on Tuesday.
Yeah, what was that?
That was what was it? Oh, I think that was a fire. I think is what happened. There was a brush
California fire.
Yeah.
So they were saying EIX. All these utility companies especially the ones out, that are in California here, have all been, taking some heat as of late. PCG was another one there because somebody's going to be liable for all these fires there, and they're saying some of these utilities could be, responsible or could, have to pay some money here.
EIX is on the comeback trail here, trading up 23 cents in the pre-market. I would look at 72.28, Fuzzy. That was your high from yesterday, and then things really open up after that. But you're getting a 2-day bounce, or a bounce off the low here. Always want to take out the previous day's high, and then you can figure a retracement. You went from a high of let's call it 83 down to 68, 15-point move, 7.5. Like 75 and a half would be a 50% retracement. But first things first, taking out 72.28, holding that at least for the first 15 minutes of the trading session.
I'm just trying to look here at, and just see what they said about the California wildfires. First, they said that they can't comment on whether it was their equipment or not that caused it. But the same thing happened with PCG. So, and this was the fires from before, up in wine country there. Napa Valley or wherever it was. Oops.
The bat phone.
Gotta turn those ringers off. That's maybe on the utility
PCG
company
really.
That's PCG calling right now. We didn't cause the fires now. So you can see what happened with PCG. So we have precedence for what with the EIX there. PCG got slaughtered the first day and then got slaughtered 2-3 more days on those fires before, and it still really hasn't bounced.
No.
So I don't know if I'm just running in here and buying Edison International, because these things can get crushed if they think that there's going to be some liability here for them on these fires, because these fires are crazy. I mean, I saw some of these videos there, it's near the LA area now. I mean, this is, scary stuff. So, if there's going to be some, companies, there's going to be some liability here, they may have to pay some money. And that's what the market was hitting it for a few days ago, and maybe that continues.
I'll tell you, 1 week ago, I was out there golfing in that exact area where the fires were, and that golf course I was on was so...
You're in California a week ago?
Yeah, I was in Ventura, Santa Paula, exact area. I told you that I told you that you're visiting a buddy of mine out there that is not doing too good after these fires. So I told you that. I told you I was out there. I'm glad I didn't go this week. But
that was a quick trip.
Yeah, I went out Thursday. That's why I wasn't here on Friday. I went out Thursday, came back on Sunday, and boy, am I glad I came back. But all right, let's just note here, oil is moving up nicely here. Someone mentioned that in the chat, up $1.06 at 57.75. Oil's coming back off that low. Let's see what happens at 47.92. That was your high on Tuesday, and that's flanked by a high at 58.34. So let's call 58 decent resistance here in the crude oil rally coming off the double bottom.
Only other stock of note that I had was FNSR reporting, FNSR, and that stock has been wild off its earnings reports too. And this was not a good report, but it got hit hard, and then it bounced actually hard. And then it's actually down here now. So really chopped around. FNSR, Spencer, details.
Yeah, I'm not sure what gave it that bounce. The earnings are bad. The guidance were bad. 23.
Everything was bad. So people who were short and it just got pummeled.
23.
People who are actually trading on logic. Yeah, that doesn't work right now. Sometimes. 23
cents versus 30 cents for the Q2 EPS. Sales of $332 versus $330 million. So they beat on the EPS. I'm sorry, missed on the EPS, beat by a hair on the sales for Q2. Q3 guidance was weak. Q3 for EPS. Q3 sales guidance was mostly weak as well.
Guidance bad, numbers bad. Stock got hit and then had a wicked bounce. So anybody who's short, and I even thought about shorting on those numbers when it was bouncing, and I was like, too much bouncing pressure. I don't know what's happening. Maybe somebody's saying on something on the conference call. I wasn't listening to the conference call or anything. I was like, I'm just going to lay off on this. I'm glad I did, because it bounced way up there. Tell us about this after hours action in FNSR, Joel.
FNSR here. We got a spike down to 1652, and they threw some volume around on that print. Now you rallied back up a little bit, 1785.
But it went higher than that, right after that. Where'd it go? Didn't we get up to like 19?
Yeah.
After that.
Yeah, I just try and throw that kind of trading action out because.
Well, no, I don't though. You want to know why? Because this is what really makes trading action, and it tells you sometimes, just because the stock disappoints, and this is a stock that was going straight down into the report. So if they were going to say anything okay, it was going to bounce. Here they kind of were a disaster, and it still tried to bounce. So it just shows you when you're trending down that hard into the earnings report, you don't have to do much to go higher, especially in this market, which they seem to want to buy everything now. By the way, officially, I am out of my TVIX long because that did not work out whatsoever. Sold the rest of it yesterday in the 730 area. Glad I did, 688. So hard to short this market, and even buying a product, like you think, okay, maybe volatility's coming up. Maybe, we're going to start to get a sustained sell-off, and you just don't. There's too much cash on the sidelines, and it just continues, to find its way into the market. But the FNSR, I was actually watching the trading action, so it got hit hard. And then there was just an iceberg buyer that just kept stepping up, and he was stepping up at 17 and a quarter. And I was like, you know what? This guy just wants stock. And it was hitting it and wasn't, going down, and then it would step up again. So some big institution just pushed that price higher all the way up to the 19 areas.
Yeah,
and now,
right.
That institution's gone and dust is settled. It's trading down a little bit here, though. But I don't think I'm coming here just shorting it, because it was an eye-opener to see a stock rally that much on a crappy report.
I retract my statement. Over 800,000 shares traded in that bracket. So
in the 19,
yeah, from the 1652 to 1910 bracket. So
they pushed it.
Yeah. So someone said, I want out. I want to cover my short on this report. But big volume on this. First of all, it has to get green and stay green. It's trading down 30 cents. So I'm looking at that close from yesterday of 1805. If it gets above that and holds that, then I think we could see greener pastures. But with that kind of trading action, you want to see what the bears and the bulls decide at 1805, and yesterday's high is right there at 1815. So that's my setup. Coming back on the downside, when you come off a low with that much volume, I don't know. I'd still pay some attention to yesterday's low at 1720.
But again, just look at those charts when they're coming in. When they're trending down, you look at your 90-day chart, and $26 they were back in August, $18 trending down into earnings. They don't have to do much to go higher. So just be aware of that. Just because you think they're going to miss, sometimes it's not enough when they've been hit that hard going into the report. Jump over here to ratings land here. There was a few this morning, and we're going to get the jobs number in 3 minutes. So we're going to try to do the ratings here in under 3 minutes. So if there's any specific stock you want us to cover, give it to us. But I had a couple just on my list, and Spencer, you might have a couple on yours too. The only ones I really had on my list to cover, first, Celgene, which I own in my investment portfolio. Getting upgraded Atlantic this morning to overweight, price target $128. This has been hanging out here for a long time and not really continuing to bounce. And that's a little bit concerning to me. Obviously, I've got my long-term invest portfolio, and I'm probably sticking with it. But it's a little concerning to me that it hasn't really got – I'd like to see it get up over that 106 high. And it hasn't. It's just been hanging out here. And a tape that's been fairly strong. I don't know. If it hangs out here too long, it starts to breach 100. Then you start thinking it could test the lows again. It's going to be up here today, at least this morning, with the upgrade. Joel, what are your thoughts, technically speaking, CELG?
Yeah, you actually got down and dirty on that on the actual day of the report.
Yeah,
right?
I bought some more at 98. So, and you know what? And I was like, I hate doing that because my cost basis on this was $27. Literally, like I bought it years ago, and my cost basis was 27. And when I bought that next position, my cost basis went up to like 52. I was like, ew. That doesn't look nearly as nice as 27. I was like, I don't know if I'm going to add to winners anymore. Like that. When you look at your cost basis, over doubles there because, you added, to your position on $100. But regardless, cost base is still $52. So it's been a pretty good trade for me, or investment for me. But I don't know. This has just been hanging out here a long time.
I'm not going to try and pick a top or a bottom in this one. I'll just alert our traders that we're in a 4-day trading range. It's just a little over 3 points. And that 4-day trading range is from 101.13 to 104.39. So the stock usually moves a lot more than that. You had to bounce off the low. So I'd be more inclined. I do see those quad high, many highs over 105. But right now, this thing is just digesting the move off the low. And I'd see which way I'd go with the way it breaks out of this 5-day trading range or 4-day trading range from 101.13 to 104.39. So just kind of range bound. Just let the bulls and the bears slug it out at those levels. All right, 8:29, Dennis. We will let you slip away there and go into the cave to trade this number. Will the S&Ps move more than 1 point is the question. And the numbers have been very quiet lately, expecting unemployment to stay steady here at 4.1%. Here we go. We matter of seconds away from the
200K is the expectation for non-farm. 190K is the expectation in the private sector. So we will see what those numbers come out to. 200, 190, and 4.1%.
Up near the highs of the pre-market session here, the Deets contract trading at 26.46, up 650 on the day. Pre-market high 46.75. Tuesday's high, keep an eye on that, 48.75. 3, 2, 1.
We're a little early, but I was going to say
3,
remember
2, 1.
Okay. Remember that October was the best month for the jobs for new jobs since Trump took office. We had that great 261,000 number for October. So we'll see if the November reading can build off of that or not. And we're out now, 228,000 for November. Remember, 200 was the estimate for non-farm, so that beat. 261 was the prior reading. Unemployment rate for November, 4.1%, which was the estimate. So we are right in line there. Private payroll is 221 versus 190. So a beat across the board. Unemployment was even, but the private and the non-farm payroll number much higher than expected. How are we doing, Joel?
We're up. We're up. We went right through the pre-market high, made a new high at 48 even here. I'm talking basis of December contract, 48.75. That was your high on Tuesday. And I think, was it Monday, the day that we made the all-time high and we created off that? Yeah. Or no, that was actually, that was on Monday. We made that high at 65 and a quarter. Closed week on the day. Seller stepped up at 48.75 on Tuesday. Current high 48 even. So we did get a little pop off that. I see the financials liking that number. Bank America trading up 25 cents.
Crickets.
Yeah.
There's
Dennis, you're back.
Here. They like this number before the number was there. So what who gets these numbers ahead of time? Like the bank, and not that that we're really moving off of it anyways, but the banks were all bid up way ahead of this number, and then it's their number, and then they're just kind of hanging out here. So I don't know. The banks were all bid up ahead of the number. They hardly moved at all actually on the number itself, because Bank of America was trading up around 29.05 when before the number was released. It's still 29.05. This is the lowest volatility I think I've ever seen on a jobs number. They're always low, but we didn't even move a point. We move a point. One point?
Yeah, we did. We went
1 point. We moved 1 point.
2 points, Dennis. We went from
2 points. They used to move 20 points on these jobs numbers. Volatility just ceases to exist.
Did you get any?
So disappointing.
Did you?
All I want is some volatility in my life as a trader, as a day trader. All I want is a little vol. Give me a little vol. Give me something. Nothing.
Are you
nothing?
Are you a Tennessee Volunteer fan here? I don't know what to tell you, Dennis. Did you get anything off on that? There's nothing
to get off. There's nothing. There didn't move. Nothing moved. I'm ready. I'm like, okay, you know what? I'm gonna stop going and getting off the show to go trade these numbers because they're not tradable. Nothing happens.
I'm sorry.
It's hard to make money when the stocks don't move. They used to move like 15, 20 points. I can remember being like, oh, sell those financials, or buy those banks because this number's, awesome, or this number's terrible. Now there's just nothing. It's like crickets, man. Come on, give me some vol.
Well, Colts Luck is saying trade Bitcoin.
Well, that's a good point. I don't like those 1,000-point spreads I hear about, though.
All right, we got a break coming up here in just about 2 minutes, but I want to go to a stock here for Johann Smith, who hasn't put a request in lately, and I've been looking at this Twitter, and I've been looking at this $21 level, and I was thinking that it had a breakout the other day, and it did. It broke out all the way to 21.40. I liked it. I liked it above 21. You would have had some quick pops and get up. The problem was the first day that it got over 21, it opened at like 20.40. So it rallied up, it got over 21. So it's still holding there. Couple closes. So you took out the highs and now you pull back to as a support. Let's see how it's trading in the pre-market. 21.03. Yeah, so I mean, now you got a roadblock at 2150, so I don't know. The day was, to try earlier in the week when you had the couple lows under 2050. Now, I don't know. You're struggling. The Bulls and the Bears are slugging it out at 21. On the other hand, you cleared, there's two highs at the 2140 area. Then we're going, have a good chance to go back up to 2248. And just that was off the earnings rally. You had a 2.5 point break, 1.25. I mean, this whole 21.25, 21.5. Don't see a big driver here to get Twitter going. S&Ps are trying here though, Dennis. They're up 8.5.
Up another point.
Yeah. So taking out
2 points.
Yep.
2 points. Excitement here.
John Dodson's noting that Bank of America went from 28.78 to 29.15 in the before, and now is trading at 29.05.
Well, no, it wasn't before though. 28. Bank of America was at 29.05 before. Bank of America hasn't moved on this number because I was looking at it ahead of the number. Like it was literally trading right here. So it closed yesterday at 28.78. It was already bid up at like 8 o'clock this morning, up 20-30 cents. So yeah, if you held it overnight, that's the whole thing. And that's why I do a lot of overnight trading here, just before we get to our guests. I do a lot of overnight trading because a lot of your good moves are overnight. Like, you come in here, the market's up, and that's where the bulk of the move comes. I think it's Eric Hunsader that was showing, in a tweet there, that the majority of your moves, and the S&P futures come overnight. If you look at the big, moves, because a lot of times you come in, oh yeah, we're up, 10 points. And then we trade up, and we've had a little bit of intraday volatility lately, but a lot of times most of the big moves happen overnight.
All right, let's go to our guest, Chris Temple.
Taking a break, Chris Temple, National Investor. We'll be right back.
Welcome back, traders and investors, to Benzinga's PreMarket Prep, sponsored by Benzinga Pro. I'm your co-host, Joel Elconin, along with Dennis Dick, Spencer Israel working the boards, and we are joined by Chris Temple of the National Investor. Chris, how you doing on this Friday morning?
Oh, great, fellows. How are you guys?
We're doing good. Well, here we are closing on 2017. Just an absolutely fantastic year for the markets. Just give us, where the market is according, from your expectations earlier in the year, and then we'll move into what you're looking for in 2018.
Well, my expectations earlier in the year, Joel, was that we were going to get this long-awaited rotation. We've got the Federal Reserve supposedly normalizing rate policy, raising interest rates incrementally. They emphasized at mid-year after the June FOMC meeting that they are on that course pretty much regardless of what the economic statistics are, which is a message that I don't think the markets still get. But what has happened along the way is that there is still so much net liquidity being added to the markets by the ECB, the Bank of Japan, officially to a lesser extent, the Bank of England, unofficially to a big extent at times, the People's Bank of China. And so we have not yet had that more significant move higher in interest rates, partly because of that and the low rate structure. We still have the passive investment game that's in full tilt. We still have the FANG stocks doing well, and more often than not as market leaders. So that rotation that should by now in a bigger way be favoring cyclicals, be favoring the basic commodities, be favoring value stocks, has not materialized as quickly as I thought it would, but we're finally going to see that, I think, in the months ahead. And in fact, none other than former Fed Chairman Greenspan this week said that he sees things the same way. We're going to go from stagnation in the economy to a stagflation, which I've long expected us to get into.
Explain stagflation.
Well, that term was first coined, Joel, back in the 70s, when at the same time you had a weak economy, you had rising price pressures. And I've long believed, and believe it ever more, that we're going to have the same pattern going forward. That does not mean we're going to have the extremes that we saw in the 70s. We are not anywhere near double-digit interest rates, nor will we be, nor mathematically can we be at this point in time. The inflation numbers, depending on who you talk to, are somewhat massaged, but we are going to see, instead of 1% to 2% price measures, even by the Fed's own numbers, we're going to start creeping up a bit more, especially if oil, which you guys were talking about earlier, and I want to get to some recommendations on, especially if oil's rise this year is legit and it holds. That's going to be a big part of this equation. So what that did back in the 70s and what it's going to do now, in my opinion, is it's going to cast greater aspersions against fixed income. We won't see bonds annihilated like they were in the 70s, but there's no upside left anymore as far as capital gains, especially if rates creep up a little bit. Price pressures will start to hit corporations in certain areas. It's not going to be very easy for them to pass along all of their costs. And so by process of elimination, investors of all kinds are going to be forced into being thinking sensible investors again. They're going to have to look for value. They're going to have to look for those sectors that are historically undervalued right now, meaning in a broad sense, commodities. It's not going to be, a rising tide lifts all boats. There are some areas that I'm pounding the table on right now.
Chris, Dennis, Dick, what are those areas you are pounding the table on here? Because we've seen some rotation in the last couple of weeks to some of those value names. I mean, some of the banks have caught some bids. The retailers that were all pounded really caught some bids. You saw a little bit of life in oil here over the last little while, too. And just quietly, we're up near the highs of the year on oil as well. Get some of those names.
Well, in the oil area, let me talk about the backdrop real quick first, sure. Because a while back I did a commentary, and we have talked a lot this year about, is the bond market with yields still stuck at low levels right, or is the stock market right? And there are one-off reasons we don't have time for on this show as to why the still low yields in the bond market don't necessarily presage a recession or people being worried. It's all this QE from these other central banks that have kept rates compressed. But where you've also had a very contradictory picture is with crude oil, because if you look at the crude oil price, we've a couple of times looked like we're going to be trying to get up to 60 on the West Texas Intermediate contract. And yet look at the commodity currencies, the Canadian dollar and the Australian dollar. They've been stuck in a mud. They've actually been in sharp downtrends since the end of the summer. And this is with oil prices going up. It's with copper until recently when it had a root interruption in an uptrend. And so here again, you've got some place where somebody's wrong. Either the people pushing crude oil to $60 are wrong, or those who are too bearish on energy stocks, which are still down for the year, and on the commodity currencies are wrong. I think one of the more explosive areas of gains in the market coming up in the next several months, if the oil price holds, is going to be a big catch up all in one fell swoop of energy stocks, a lot of which are still, in fact, in some cases, Dennis, there are good service companies that aren't doing any better now with crude oil at $57 and change than it was at 30. But a couple of safe names that I like right now in the MLP space: Enterprise Products Partners, nearly a 7% dividend EPD on a New York exchange, and OneOak, which just went through the absorption of their former limited partnership. They're nearly a 6% dividend yield. Even if you're not a conservative investor and you want to get into those things for a 20 to 30% total return in the next year, I think they're good, for people who are more aggressive and just want to have a couple of nice anchors like that in their portfolio.
What about some of the names like Schlumberger, Halliburton? I look at a chart of SLB, and this was a stock that, was loved by the market for a long time, and it just isn't right now. It's been in the doldrums. We're sitting down here for the last 6 years down at this, and we did have a nice run up back in 2014 when the stock price got up to 118. But if you look at a 6-7 year chart, we've had some great support down here at 60 and just kind of hanging out here again near the lows. There is stocks there if you want to look at, if you don't want to buy high. Here's another example that, of a stock that hasn't really participated yet. Maybe if oil catches a bid, maybe, SLB is one that could go too. What do you think of this one?
I don't follow it as closely, but the general idea, as I just said, is that, there's a lot of these service companies out there that are not priced yet for a much better environment. I'll give you a kind of a one-off too. Is a little Canadian company called Enterprise Group. The symbol is E on a Toronto Exchange.
What's the symbol?
The symbol on a Toronto Exchange is simply E.
Okay.
And then on the over-the-counter market, its corollary symbol in the U.S. is ETOLF. This thing is selling for about a third of its book value. A very micro-cap stock. But they're not only involved in energy service, but they're also involved in infrastructure development in Western Canada. They have several divisions. When the whole sector got their brains kicked in recently, they had to downsize a bit, but they came through it well. In their latest quarter, they're back in the black again. Their cash flow is ramping back up. And again, this is a micro cap. It's a penny stock, but it's a great story for energy as well as the infrastructure kicker in Canada. But, there are going to be a lot of names, and I'm whittling down my shopping list during the holidays right now, where, as I said a minute ago, if oil manages to hold these gains, we don't have a big growth shock. I think there's a lot of really good companies, Schlumberger probably one of them, that are not yet priced where they should be with this recovery in a much healthier energy sector.
Coming out of the chat, Spinner wants to know if you have any opinions on AMLP, Illyrian MLP ETF. Probably a broad basket.
I think generally, Joel, that it would be a good place to go for people that don't want to do their own shopping. I don't know enough about it.
Okay.
It's not on my recommended list. I'm looking at a couple of other individual names, frankly, to add along with Enterprise and OneOak. But it's probably, again, a no-brainer, because even in the case of the master limited partnership space, a lot of these companies, when oil was back $140 a barrel and everybody going nuts raising money, some of them got overly leveraged. They had to cut back. It was tough to digest some of this. But a lot of them are leaner now. And again, this is one of the things generally about the whole energy space, that the companies that came through this, the companies that survived when oil went down to $26 and natural gas was under $2 and are still standing, but they're leaner and they're in better shape. There's going to be some great money made here, and everybody has totally ignored this sector just about this year.
All right. Just going back to your earlier discussion about interest rates, and interest rates going up, but on a historical perspective, they're still very, very, very low, and limited room to keep ratcheting it up for potential negative impact on the economy. Though it's looking a little bit better, but just a backdrop on interest rates, a very, very, very low historical perspective. So the rotation that we had out of the FANG and the high beta stocks, you like that, right? It's good to see the money come out and be dispersed a little bit more. You like to see the wealth spread around a little bit. So you're glad to see that rotation earlier in the week.
Oh, absolutely I am. And it's something that, frankly, Joel, I think that we need to have more of going forward, so as not to have this market so top heavy with just a small number of FANG stocks and momentum names that it undermines everything. I think that the best environment that we can have going forward, all else being equal, is to see in the next year or so, maybe the major averages, especially the NASDAQ, tread water or even go down a bit. But within the market internally, we have more of a rotation. We have money go back into some, Dennis mentioned retailers. I cringe when he said that because I came within a whisker of adding back both Ingles Markets and Dick's Sporting Goods to my recommendations recently, but I was a stinking coward. I didn't do
That's
it.
okay.
That was I.
Yeah.
I was a coward on all those things too. I liked them all down when they were getting hit, and I didn't know any of those retailers either. So you're not the only one, Chris.
Yeah. But I'll tell you, another area that's hot right now, we talked about it a while ago when I was on the show. This has been slow to develop, but in the nuclear energy space recently, you've had two major announcements recently. Cameco shutting down MacArthur River up in Saskatchewan, 9% of global production. Kazakhstan, which is the largest country producer in the world, announcing that in the next 3 years, they're going to cut production by a total of 20%. It's lit a fire under that sector. There's a lot of things going on, particularly in the United States here with the Energy Department, that is going to give a bigger shot in the arm to domestic producers. And I'm pounding the table also on uranium still.
Okay, could you give me that?
Any good uranium plays?
Yeah,
just
could you
before I
give
let
the
you go, is there any
uranium
stocks
plays? Yep,
that you're looking at there?
Well, one of the ones that's a domestic producer here that has got obscene leverage as this market recovers is Energy Fuels. The symbol is 4 U's in a row, UUUU, on the NYSE. And this stock is a little under $2. Their production right now is a little bit around 1 million pounds a year. They can take that to 6 to 8 million pounds a year with very little effort. By bringing some production back online. They are also in the process of working with both the EPA and the Energy Department on some projects. And frankly, and this has been a real cornball story recently that I know political junkies have paid attention to, but this whole Uranium One scandal of Hillary Clinton selling 20% of our uranium to Russia and so forth. It delights me to see her hoist on her own petard with this Russians are coming stuff. But it's a wildly exaggerated story. A lot of it is nonsense, from the far right, I guess, politically, you would say. But if nothing else, that has helped to bring people's understanding around to the fact that in the U.S., we still generate nearly 1/5 of our overall power from nuclear energy, and yet we import 95% plus of the uranium to do it. That's going to change.
What about UEC? What about UEC, uraniumenergycorp.com?
Well, they're another one that I think is going to do real well. I'm somewhat familiar with the company. They are one of the companies that is in the ETF that covers the whole uranium space, URA, the Global X Uranium, which just like that MLP ETF is one that people, if they don't want to do their own homework, buy URA. You're going to like it in a year or two. But UEC is a good company. They just actually did a mutually beneficial deal with Energy Fuels on some properties that they have in the Western U.S. that benefits both companies.
All right, we've been on the line with Chris Temple of the National Investor joining us here on Benzinga's Pre-Market Prep. Thanks a lot, Chris. Great input from you. Have a great rest of 2017. We'll be looking you up early in 2018.
Take care, guys.
Thanks, Chris.
Yeah.
All right, here we are. S&Ps went up to 49.5, backed off that area. You got to think about 2650 psych, but still my focus 48.75. Tuesday's high. I want to see us clear that in the session and just keep on going on the downside. Mid-range on the session should give you a little bit of support. 43.75 here. Dennis, what would you like to cover here in the remaining 7 minutes of the show?
Well, I'll give you imbalances first, and then we can just talk a little bit overall strategy, how I'm approaching the day here. Alibaba here, 166,000 a buy. Alibaba is fully on back. I mean, these tech stocks gave you a chance 3-4 days ago, and they've all rallied significantly since the lows. So Alibaba, another buyer here this morning. It's up another couple bucks. G showed a little bit of life there yesterday. It's 131,000 to buy this morning, showing a little bit of life here this morning. It's trying to hold those lows that we got back there from 1746, 1750, but tax loss selling season is coming here. I'm just concerned that there may be a few people looking to book some of those losses, and who knows, I might even be one of them. Sorry, I can't talk here. Citigroup 81,000 to buy, Morgan Stanley 38,000 to buy. So your banks again are very strong this morning following the jobs number. They were actually strong ahead of the number as well. Square 123,000 to buy. Square sets up an interesting here now. Let's talk SQ for a while. We haven't talked it for a little bit. I have not been trading. Like I said, I was trading Square a lot before it got too volatile for even me. And I haven't been trading it the last few days or even since it had the big collapse. But, it's starting to show some life here again. If Square could sneak its head above 40, starts to get interesting. What are your thoughts on SQ?
Yeah, Square trading up 87 cents. I know this thing's been just whipping around like a ping pong
Whipping
ball.
too much for me.
Yeah.
I like volatility, but I don't like that much volatility.
Yeah, you had the double close at 37, 60, and 61, which it did not. It got through. Did not see yesterday. 39.46. You're trading above that right now in pre-market trading. Your 2-day high, which you are probably going to challenge early today, 39.77. Maybe start figuring it. Maybe you do have your low in here, your 14-point move down from 49.56 to 36. Add 7 to that. Maybe get back up into this 42, 43 area. I mean, I see that as the area where going to. You had a couple highs and then up at 42. Where were your couple daily highs? Man, this thing is really moving around. Actually, 43.39 to 44.05. Those are your highs back at 28th and 29th, and that's right in your 50% area.
Jump over here, just a few other ones.
I want to talk GE real quick. GE.
Go ahead.
You take the news, right? Oh, cutting
jobs.
Yeah, cutting jobs. Woohoo! This is it. This is the bottom. Look at that. They rally that thing off
right
it.
back.
Yeah, gets back over.
It can't hold a game.
Yeah, look at that. That's bad. Pop up. 18's the number now in GE, Dennis. That's our long-term. And resistance was at 18.50 for a while. They got a cap on that, and now look at that. The last 4 highs, 3 or 4 of them have been between 01 and 06 with the 1784 and high. So absolutely no upside in GE until we clear $18.
Textbook definition of overhead supply. So many institutional managers looking to maybe ring the register to realize the tax losses. Every time this thing rallies a little bit, it's met with sellers. And you're right. Yesterday, you're like, oh yeah, here, you got some jobs, going to get some of those expenses down. The market's applauding it in the morning. And by the afternoon, it gives it all back again. When stocks cannot go up, even on, good news here, It is an issue. And, this is a stock that, think about the laggard market we were in. So many laggards catching a bid in the last couple of weeks. GE could not catch a bid. It just does not. So this stock is the dog of all dogs, the dog of the Dow, the dog of the year. Unfortunately, like I said, I have in my invest portfolio. I almost think I was looking and really analyzing the portfolio yesterday. And, there's actually about a dozen stocks I'm down in right now out of my 100 stocks. And I was thinking, I've taken some pretty good gains on some stocks this year. And I honestly am contemplating just selling the GE. And maybe this is going to be the bottom when I do that. But I need, to start to get some of those gains down a little bit there because it's going to be a heavy tax bill. So I think there's other institutional managers that are sitting on a lot of money too, looking to sell stuff like this. So maybe in January, maybe this thing starts to catch a bid again, or maybe the 30-day holding period after you sell it. But I just think right now, when I look at this thing, I think there's going to be some tax loss selling coming its way.
Can you tell me what's going on in Bank of America here? Because I just think it hasn't been trading. Is there some kind of iceberg order around there? It's been very, very quiet. I was looking at it.
No movement here in BAC. Yeah. There is a huge order, 100,000 shares to buy 29.05 in the pre-market right now. So somebody's making a stand there, making a bid there. I don't know. Stocks is kicking up near the highs, but very quiet here pre-market action. Even though despite it's trading up and trading some volume, it's all trading the same price.
Yeah, I know. I'm just keep looking at 29.06, 29.06, 29.06. So just for our Bank of America traders, your highs from earlier in the week, matching highs at 29.31 and 29.30. That second high, 29.30, it opened up into that level after they announced the big buy, or not big buyback, but increased their buyback. So there's the key to more upside in Bank America, clearing 29.31.
Just thoughts on today. So we're obviously getting another rally. I mean, the tech stocks are full on rally mode here now too. All the buy the dippers coming in here and saying, oh, we missed it. Let's chase it up here today too. I'm a little bit cautious to chase the rally, but at the same time, I mean, this is market just seems to, like, you look at a stock like Square. Square is one that hasn't really went yet. You know, you got to buy it up. If you're buying it now, you're buying it up $1 this morning, but maybe get a little peel back there. I think, you know, it's one that I'm looking at. These are just trades, not looking at investments here, but Micron's the same story. I mean, it hit below $40 and, you know, boom, boom, boom. 3 days is right back up at 44, getting half the losses back. So the only concern I would have is some of these are coming into the 50% retracement. Like, check out something like Applied Materials. This sets up pretty well, actually. So AMAT, you're about $2 away from it right now. But 3 days ago, we just got washed out low down at $48.25. Look at all the support you had at $55 in October and November. If you'd subscribe to that theory that the old support becomes new resistance, this thing gets anywhere up near 55, I think there's going to be some sellers. So that's actually one that could set up, if it got up another couple bucks in the next day or two, that could set up from the short side there. I think that's what I'm looking at, is some of these, you know, have the 50% retracements of the sell-off coming up. And maybe, you know, that's where, you know, some people who bought the dip maybe take some profits. So keep an eye on that. I'm just cautious to chase some of these stocks up because they were so weak a couple days ago.
All right, before I have Spencer wrap up the show here, we got a great guest coming on Monday, and that's Christian Fromhertz. And he has created the only crypto blockchain equity index out there. There's been some ETFs filed, but the index has 22 companies in it, names like Riot, Overstock, CME, and GBTC. So we'll be talking to Christian on Monday, and I'm looking forward to that. Spencer, what do you got for us?
What do I got for us? Well, I just wanted to do a quick rundown of ratings. We talked about a couple other ones that caught my eye this morning. Celgene, I think that was the one that
we covered that.
Was the one that was mentioned. Okay, Lending Club upgraded this morning. That caught my eye. Trivago upgraded at Deutsche Bank from hold to buy. That caught my eye. As far as those are the only upgrades as far as downgrades go. There's one really, and that was DHI, DR Horton, catching a downgrade this morning from Keefe, from outperform to market perform. That was the biggest one that I saw this morning. But that's it for our show today, and I guess that's it for us for the week. Hope you enjoyed all of our shows. To catch them again, you can do so on our podcast on iTunes, SoundCloud, and Stitcher, or by going to youtube.com/BenzingaTV. Thanks to everyone who was in our chat today at premarket.benzinga.com. Thanks to everyone who listened on YouTube. Thank you to Chris Temple for joining us. He is from the National Investor. Hope everyone has a good rest of your day. Hope you have a good weekend too, and hope you join us again on Monday.